Hello everyone and welcome back to the channel. My name is Adam Hancock once again, if we have not met. And today I want to talk more about real estate, but specifically about the subject of opportunity. I think it'd be weird right now to say things are not weird. It would be weird to not acknowledge that we have almost 8% interest rates and that inventory is still low in Southwest Florida and people are scared. There's uncertainty. But the thing is I still think there's a lot of positivity coming out of surface level negatives. In the last 3 weeks to 30 days, especially, the trend is going more and more in that direction of people finding ways to leverage things that are freaking other people out. So there's 5 main buckets that I see a lot of that falling into that I would categorize. I want to articulate those 2 today to hopefully give you an advantage in the rest of Q4 of 23 on to 2024. So we're going to do that. As always, if these videos provide you any value at all, please consider us for buying, selling, and or investing in the entire state of Florida. And without further ado, let's hop in. Okay, number 1 on my list, no particular order, is the idea of emerging markets. Markets that maybe haven't hit full maturity on appreciation or just future value in general. And there's a couple intriguing things to me about this category right now in 23. And the first one being the idea of popular areas versus fringe cities, and more about the idea of the timing of it. So say you have, let me illustrate a quick example. Say you have a area like Lakewood Ranch. So COVID hits, work from home, accelerates the amount of net migration that is hitting Florida, 300,000 plus people in a single year. But all those people typically pick the most preferred option. They're going to pick the most popular area. Lakewood Ranch is really poised to do it, but everyone's trying to push into one area. And then outside of their area, you have junior versions, Parrish, Palmetto, Bradenton, areas you would go to because you couldn't get in the main because of availability, pricing, size, space, etc. Well, timing is what creates the opportunity here because that is all still true. But what happened is you had a weird timing in history that has not happened often. And Lakewood Ranch set in the popularity hysteria for 2+ full years. Prices rose, all this kind of stuff rose. Well, people started to discover the fringe cities because pricing rose $200,000 on average in a year and a half. But by the time they got their head around I'm actually priced out of my dream market, or I could maybe do Parrish. By the time that happened, it was late. So the market completely shifts. We go to 3% to 8% interest rates, and things kind of halt. So you had one area that went on a wind stream, and those other areas would have came with it and would have been junior versions like normal. But you had one that went to here, and the others were starting to go to there, and they stopped because the market completely changed. Well, that gap in pricing creates kind of the interesting opportunity here. And if you kind of go back and explore the fringe markets, you could maybe have a nice little jump in appreciation because that mature market, unless you disagree with me completely, I don't think we're going backwards in price. Okay, another thing that I think is interesting within the emerging market conversation is the builders and communities edition. Because what we did here is we don't just have emerging cities. We actually had an affordability issue, kind of a crisis. We don't have an equal representation of demographics when a market jumps $200,000 on average. It becomes a 1% gain. Well, they got to solve that problem. A city can't exist like that. Lakewood Ranch is no different. So you had Aurora come in to the middle of Lakewood Ranch with a $350,000 cap on single families. You have Avanti with Pulte Homes that sits next to Shoreview, but is their affordable solution. What happened in North Venice and Nokomis, where originally you had maybe from new construction, Talon Preserve, you have Palmero. You have 5, 6, 7 other communities, like I mentioned in last Sunday's video, that are creating a mini Palmer Ranch. And a lot of them are bringing affordability to markets that people were already interested in. So beyond just revisiting the parishes of the world or the Wesley Chapels of the world in Tampa, what you might want to also do is you might want to revisit the idea of what you're originally looking at. Just a little tweak on the kind of community. Because a lot of times, in my opinion, when people are shopping and they get kind of that buyer exhaustion, they have this memory of what it was. But you might want to come back in with fresh eyes, and I think you might be surprised. Okay, the second category I wanted to talk about is investments and snowbirds in general. More along the lines of maybe not quick Airbnb stuff, but a little bit longer term equity or partial vacancy or something like that, like even break-even vacancy. And, I had an interesting conversation that kind of inspired this one that I've been thinking about this a lot lately for all the reasons I'm going to mention, but I was speaking to an agent of mine. He's a French Canadian, and we deal a lot together with Canada to Florida investments, Sarasota, Naples, that kind of situation. And his folks are almost like giddy on the opportunity of the market shifts, right? Because, that's kind of the consensus is, that when things like this happen and things are a little weird, it's some of the best times in history for people that were liquid and ready and are leveraged to gobble up properties, because a lot of people can't. And when the market is weird in like a Fed related way, interest rates, things that are restricted, that affects like the mass home buyer market, but it doesn't affect everyone. And if that's true, then there's a lot of leverage points. I think the thing right now is people are just basically are like, how good is the deal? They're trying to quantify based on, the data over the last 3 years is completely skewed, right? So people are trying to look at like, if someone decreased the price, is that actually a good price? Is it a bad price? Like what's the historical what's the decade long, value there? But I think a couple of areas have a lot of leverage right now. And one of them is home principal. Just in the stellar MLS, which we have, I think the biggest MLS in Florida, but all of Sarasota, all of Tampa, some of Naples, there was 511 price decreases just yesterday. That you could, that's just a simple way to lean into. Basically, typically if things are dropping, they're racing down, not up. And I think people can lean into that. I think people can look at what people's equity situation are. And I don't know, I don't like the connotation lowball, but I do think you could, lean into that kind of leverage. Home principal in general is incredibly interesting right now, because home principal is what most people are doing that are not home builders. That's the category they're massaging in order to help people get into the homes they're trying to sell. Because they know the mortgage is going to be so expensive, right? But all of these costs are percentages of the price of the home, right? So people need the cash, and then they need to be able to pay the monthly payment. The easiest thing for a home seller to help with a lot of times is in that category. So I think that's one. Cash leverage obviously is huge right now, right? Because this is a horrible market if you have to get a mortgage. If you don't have to get a mortgage, this is some of the most affordability we've had in a long time. And the inventory, albeit still low, but the cash is definitely going to be more king than ever here. And then even fixer uppers, I think like it's always a tricky one if you're not really experienced. And in markets like Sarasota, I mean, it's super competitive. If that's on MLS or on Zillow, like probably other people passed it up. But I think the idea of a fixer upper in a market where it's expensive to borrow money could be interesting as well. So just something to think about if you are exploring that avenue right now. This might be a 6-month time to lean in. All right, number 3 on my list is the idea of new construction leverage. So new home builder leverage. And I've been talking about this one a ton lately. I still think it's either one of the best opportunities or the best overall for a buyer to get something from someone is to buy from a business, not from a person. Because a person has stuff. They have limited equity in one home, right? That's all they can work with, right? And they have a cost to sell through the agent and the fee infrastructure that they're dealing with, right? So there's a limited margin they can make. They also have ego, insecurity, their own personal logistics, their own personal stuff in general. And you got a lot of baggage there to deal with. You buy from a business, there's no baggage, but they're talking margin in total margin, right? Their whole neighborhood, the timing, the phases. They could lose a little on one house, gain on another. So they're managing a much bigger infrastructure, which gives you a lot more room potentially to work with based on that. They're also competing with all the other builders around. So if you live in an area that's very dense with builders like, Sarasota, Tampa, Dallas, Texas, something like that, Orlando, then it's a lot more competitive. And I think you can leverage that. The other thing I think is really interesting is the supply chain logistics thing these guys have to deal with, right? They have to guess. They have to forecast. They have to try to, these materials aren't just chilling, unless you're Lennar maybe, aren't just sitting there, in a back room, is if they need a contract to know what to do next. And they need to know how many contracts they think they're going to get. And they have to time all that, right? If they get a contract with you, then at least they have a defined timeline they can make a decision on, right? And they're willing to trade things to do so. We had a girl on our team, Casey Truman, that was talking about yesterday that got like $55,000 worth of incentives at a single builder on a single contract. There's just a lot more going around right now. The other thing when it comes to new construction leverage in general, I would say, is the buying in early concept, right? That's kind of the last thing people are thinking about right now is buy in early in this market. But all the things I spoke about, I've been speaking about for 2 years, Sarasota obviously is an example always, but East Fruitville, High Hat Ranch, East Lakewood Ranch, Welland Park, North Venice. All of that development that was exciting then is still exciting now. And what didn't stop is these guys developing. They're still moving along. The only difference is that it's probably going to be a lot cheaper than originally they were thinking because the market's not going to continue like it was. And also, you're going to have a lot less competition because this is probably the very back of someone's mind right now. So that opportunity to get east of Sky Ranch or to get the new Lakewood National or something like that, the new Del Webb, or all this stuff going on in North Venice, I think would be maybe one of the most attractive times probably in history when it comes to Southwest Florida, and also one of the biggest opportunities when it comes to appreciation. All right, I have two more for you. They're a little quicker. And the fourth being the idea of rent to own / mortgage assumption, also mortgage assumption. So when it comes to rent to own, I don't talk about that a lot. It's, I go back and forth on, how attractive that is. A lot of times in the past, it was attractive for like first-time home buyers or affordability reasons in general. But right now, I think it's attractive across the board because there's a seesaw and a give and take that both parties can benefit. So on the buyer side, the idea that you could go into an arrangement where you're trading rent, but you have an options contract of sorts where you can lock in today's attractive home price because you still do have leverage at that point, but without having to pay for today's mortgage, it could be really, really interesting. And then you then give the seller, kind of a guarantee that their house is going to sell, or you're going to have to give them a big deposit and you're going to pay the rent, let them figure out their logistics, let them breathe easy. There's a nice give and take that I think becomes interesting. The second thing is mortgage assumption. So I don't know how often people look at this, and it's not applicable to every property. But a lot of the reasons people can't sell right now, or a lot of the reason our inventory is low, is the lock-in theory. People bought at 2.9%, 3.5%. And if they sell that house, it breaks the chain, and now they're buying in this same market. And it's almost like their house is so cheap monthly that they can't sell. Well, there is, depending on the mortgage, there is the possibility. We've seen 2 people on our team this month did it, that you can assume their mortgage. If you buy, you can inherit the rate. Now, you have to have the right logistics and particulars, but how amazing would that be if someone wanted to move to a situation where they're going to sell anyway, and they wouldn't have done it if they thought they couldn't, sell to a big pool of buyers. But you could assume their mortgage and get a good priced home because of the market's weird, and to get a 3% interest rate. That would be something I would really ask the question for if I bought a house right now. Okay, my fifth and final one for this video, it's a simple one. Just the idea of being flexible with logistics. One of my favorite ways in any negotiation with a give and take relationship is to give terms up in lieu of money. If you're going to buy a house and you let them have a really extended closing, if you're going to buy a house and you close it, don't move yet, let them have a post-occupancy period that's maybe a little bit longer than normal, then a lot of times you can win when it comes to the money. You can get a lower priced house. You can get a house that maybe you wouldn't have been as competitive with because people didn't want to agree to those terms. And you can give the seller a little something or give the buyer a little something if it's vice versa. But you can win when it comes to what's important with you. If what's important to you isn't as important to them, then again, all of these have to be somewhat win-win in this kind of market, and I think that'd be a nice way to go. All right, my friends, that's a wrap for today's video. I really hope you enjoyed it. If you did, please consider subscribing to the channel. Again, my name is Adam Hancock. I own a brokerage called the Sunshine State Company, and if we can assist you in any way, buying, selling, and/or investing in the entire state of Florida, anything you want to speak further with about here, even if you're 2 years out, please consider reaching out. We'd love to have that conversation. The website has a bunch of free resources as well if you want to do your own thing. Thank you guys so much for watching. We'll see you on the next one.